You found your dream home, but can you actually afford it? A lot of buyers focus on just the purchase price, but there's way more to it than that. In this video, I'll break down everything you need to know from mortgage payments to hidden costs so you don't end up house poor. And don't forget, stick around until the end to download my free home buying budget worksheet to help you figure out your real numbers. If you're new here, I'm Bren Brewer, your favorite realtor, and let's get into it. Let's start with how lenders decide how much you qualify for. They use something called the 28-36 rule. This means your monthly mortgage payment should be no more than 28% of your gross income. Your total debts, like credit cards, car loans, and student loans, those should be no more than 36%. But just because a bank approves you for a certain amount doesn't mean that's what you should spend. So let's break it down a little further. Your mortgage isn't the only cost to consider. Here's what actually goes into your monthly payment. Principal and interest, which is your actual loan payment. Property taxes, which will vary by location and county. That can add hundreds per month. Homeowners insurance, which is required by lenders to protect your home. HOA fees, if you're in a neighborhood with an HOA, you'll need to factor those in too. And then a good rule of thumb is to budget 1 to 2% of your home's value per year for maintenance and repairs. All of this combined is what you really need to be ready for. Now, what about the down payment? A lot of people think you have to put 20% down, but that's not true. Many loans allow you to buy with as little as 3 to 5% down. Of course, the more you put down, the lower your mortgage payment will be. But if a lower down payment helps you buy sooner, it could be worth it. And don't forget, there are programs that can help you with down payments, so always ask. A hidden cost that always catches a lot of buyers off guard are closing costs. These cover lender fees, title insurance, and other expenses, and they usually range anywhere from 2 to 5% of the purchase price. On a $300,000 home, that's an extra $6,000 to $15,000. The good news? Sometimes you can negotiate for the seller to cover part of these costs, so don't forget to ask. Now, here's a big mistake that I see all the time. Buyers look at what the bank says they can afford instead of what their budget says they can afford. Just because a lender pre-approves you for $400,000 doesn't mean that's the best decision for your lifestyle. Factor in your monthly expenses like childcare, travel, and savings to make sure your mortgage fits your life, not just the bank's formula. Now let's do some quick math so you can estimate your own budget. Take your monthly gross income and multiply it by 0.28. That's the maximum lenders want you to spend on housing. Then take your income and multiply it by 0.36. That's the total they want for all debts combined. For example, if you make $6,000 a month, lenders say your mortgage should be around $1,680 maximum, and your total debts, including car loans and credit cards, should be under $2,160. But again, just because a lender says you can spend that much doesn't mean you should. So how much home can you really afford? The answer depends on your income, savings, debt, and long-term goals. But don't stress, I've got a free budget worksheet that makes it easy to calculate what works for you. Just click the link below to download it, and before you go, don't forget to like this video, subscribe, and drop a comment. What's your biggest question about budgeting for a home? Let's chat. I'll see you next time.